Morning, everybody. You're nearly there, nearly lunchtime, I think. One of the real joys of my job is I get to travel around the world a lot. In the last few weeks, been many parts of China, Southeast Asia, Japan, the US, Europe. And if there's one thing that's really, really clear, is that in the energy transition, each country is taking a very different pathway and moving at very, very different speeds. You could actually see that if you look carefully at last year's data. This was the $2.1 trillion that was invested in clean technologies last year, up 11%. But if you look at the dotted box, what you will see is that actually it grew 21% in Asia, it grew 7% in the Americas, and minus 1.7% in Europe. So already very, very different rates of progress across geographies. And if you look at it by technology, it's even more stark. So 93% of the 2.1 trillion went into just 4 different technologies: renewable energy, batteries, EVs, and the grid, and 7% into everything else. So again, depending on which technologies are getting deployed in your geography, will tell you how quickly you are moving. And there's sort of 4 different trends that I wanted to, 4 different drivers I wanted to highlight around this. So one is technology costs. It's been mentioned a lot. Everybody talks about, rapidly falling costs of renewable technologies. Solar modules were down 61% since 2023, so that's absolutely massive. Battery packs down 20% in the last year alone, so really steep. It's a slow wave change, so again, it's easy to overlook. Policies are much more of a fast change, and particularly this year, so there's been lots of interest around tariffs. This is the US tariffs, sort of in blue where they started, where they were mid-year, and kind of where they are now. So very volatile, very, very fast change. And policy is either a headwind or a tailwind. Temperature is another one of those actually slow-moving changes. And actually in the last 30 years, this is in Europe, temperature increased by 2.3 degrees C. So that's pretty a massive increase in just 3 decades. And we'll see the implications of that. And last but not least, probably the fastest change of all this year, AI, and again, this great quote from CEO of Anthropic, it's sort of how fast it's moving. So it certainly is moving very quickly, and this year, sort of every meeting has had a whole series of discussions around AI. So what does that do to the transition if you take those just an example? So let's look at the power system first. Actually, this first 6 months of this year has been another record 6 months of renewable energy implementation, so investment flowing into renewable energy. It's like 2/3 into solar, particularly small scale, and 1/3 into wind, particularly offshore in this half. But again, considering what's going on, it's pretty amazing that it's still in record territory. That does vary by geography. So actually, in the US, that number was down 36% year on year for the first 6 months. And in Europe, that was up 63%, based around some large offshore wind deals. So you can see the very different, again, by geography. And this is the US. This is our forecast for the US for renewable build-out. The dotted line was where we started the year with sort of consistent policy. The sharp line that drops was where the on-BBBA came in, and that was our prediction of the impact. We've just announced a reforecast, which actually smooths that curve. And again, you'll see there's a dip where policies are being removed, support is being removed, but you'll see it actually does start to rise again. And that's really where the economics kick in. So the technology cost curves override the headwind of policy. And if you look at AI, so this was our forecast in April of the year of power demand for AI, what you'll see is it ends up being similar to EVs, growing more sharply. It goes from about 3.5% of power demand in the US to 8.6%, so that is significant. It's not as wild as some people think. Our forecast is that blue line, so maybe we're being too modest and too low. But again, there is a lot of different estimates out there and forecasts out there. So very, very unclear. Let's see how it plays out. We're factoring in what can actually get built as opposed to where people would like it to go. And really what that means is that data centers, if you look on the right-hand side of that chart, joins air conditioning and EVs as a significant addition to power demand. It's not the only thing that matters. It's one of a number, but it is significant. But again, even that varies by country. So that's a global number, but if you look, say, at Indonesia, you'll see air conditionings double what data centers or EVs can be. So again, very different pathways for different geographies. So what about road transport? So this is EV sales continuing to grow. We saw battery prices, falling rapidly. That's feeding into EV sales. You can see, and on the right there, year to date, again, you can start to see China and Europe being much more above the global average. But again, if you roll the clock forward a little bit, what you'll see is pretty much all of those start to curve upwards. Again, that's the costs of batteries really starting to drive uptake. And you'll see the highest riser actually there is Australia, which is going to see a sevenfold increase. And that's really driven by that openness to all technologies, all providers. So Chinese EVs in particular will be a big driver of that number. So again, moving at very different speeds depending on the geography. Costs, so the cost parity in China is already below that of internal combustion engines, and that's why it's already taken off. And the other countries will cross that barrier. At the beginning of the year, this was the policy support across those all major markets. Again, EVs was the direction of travel for everybody. That's where we are now. So in China, those policies are still in place. The US, they're pretty much in reverse, and they're slowing down in Europe. But so in the US, what we think is we'll move by 2030, instead of almost half sales being electric vehicles, about a quarter will be, so 27%, just over a quarter. Again, it slows down, but it doesn't stop. The economics take over, and it still rises. And probably one of the clearest charts that show you the difference in geographies, this is Chinese EVs sales overtaking passenger vehicle sales in the US. So you really are seeing the two different pathways being chosen. And this will happen probably next year. In the hard-to-abate sector, so we've seen somewhat of a reset on that. This is for committed projects. So actually this number of 3.3 million metric tons is actually a small number. But it is growing, so we're starting to see committed off-takers for production. The left-hand chart shows you what was announced, with over 200 million metric tons. The bottom bar is what has an off-take agreement. The right-hand side, that's the 13.4 million metric tons, and the right-hand side shows you exactly who, really where the off-take's firm, and again, that's the bottom slice of that. So it's about 2 million metric tons of sort of, if you like, real business. And you're starting to see who the off-takers are. The off-takers are going to be people that use hydrogen today, so fossil-based hydrogen, also aviation and shipping. So these are the biggest deals. And you're seeing very different pathways again being chosen. So if you're in the US, you're going to have blue hydrogen, so gas and CCS. If you're in China, you're going to have renewables and electrolyzed, so green hydrogen. Again, two very, very different pathways. It's early days. We'll see how those scale. And lastly, I just want to talk about adaptation, actually. It's a newer area to us, but it's a real area. And, this is Europe. Fires in Europe in summer were really not heard of until very recently. But you can see how that has really started to become a real feature. So it's land burnt in Europe with wildfires. And our colleagues in Bloomberg Intelligence have crunched some numbers about what that actually costs. So last year, $1.4 trillion was spent on climate-related damages. So that includes damages to property, also the cost of outages of power, crop damage, inflation for build back, those kinds of things, all factored in. It's $1.4 trillion. And again, we said $2.1 trillion last year was invested in clean technology. So this is a significant number. If you just look at the property damage pieces of it, just look at the last 2 full years, it's around 350 to 400 billion. You'll see the costs were borne, about 50% was government. About the next half of what's left was insured, and the other quarter was actually uninsured. So these are real damages going out to households or banks that have lent the money. So again, this is now becoming a sort of serious financial consideration. We just did some research to create a country adaptation framework. We looked at 25 different countries. That's the x-axis here, and we put that against the Notre Dame gain, so the sort of climate exposure rating. And what you'll see is a very wide distribution. Again, by country, the preparedness and the impact will be very different. If you look at the very right-hand edge, these are the people who we believe are the best prepared. One is Canada, and one is Singapore, but then you see a long tail of other countries. So again, the pathway that's going to be taken, the approach to adaptation, the risks that people are facing, be it fires or floods or those kinds of things, or sea level rise, are going to be very, very different. So I think you'll find, every geography now is really on a different pathway. It was mentioned before about country platforms. That's important because every country is different, and depending on the pathway chosen, the speeds are also very, very different. There's a number of key factors pointed out that are really going to have a major impact across all of the sort of key sectors that we think about when we think about decarbonization. So I hope that framing is useful for you as you go into COP in the next 2 weeks. Think through a country lens, and what does that mean? And hopefully that will help us all to make progress. Thank you very much, and enjoy COP30. Thank you.